Hi guys, this is Kurve-Karande and I welcome you all to my channel all about finance. What is a penny stock? Should I invest in a penny stock? How to invest in a penny stock? Can a penny become multi-bagger? Let's see. Penny stock was defined by SEC, which is Security Exchange Commission, as a stock which is trading below $5. But this definition varies. We can say that a stock which is trading at lower prices and also having a lower market capitalization of less than 50 crores is said to be as a penny stock. But this should not be the only criteria to be a penny stock. For example, if I say that I have two stocks, stock A having a market price of 100 rupees and stock B who is trading at rupees 10. Stock A, which is trading at 100, is giving me a return or EPS of 10 rupees, whereas stock B, which is trading at rupees 10, is giving me a return of 0.5%. So what do you think? Which stock is a penny stock? Stock A having a price of 100 rupees or which is trading at 100 rupees, or a stock B which is trading at rupees 10? Here most of the people go wrong. They usually think that a stock with a price of rupees 10 is a penny stock. But friends, here we go wrong. Why? Because the stock which is trading at 100 rupees is giving you a return of 10 times of its value, whereas a stock which is trading at rupees 10 is giving you a return of 0.5% only. So here we can say the stock which is giving me a return 10 times of its value is a penny stock. Okay. Also, a stock which is having a good business and which are trading at its undervalued prices are called as a penny stocks. There should be three filters for a penny stock. First, it should be trading at a lower price. Second, it should have a good business. And third, it should be trading at undervalued prices. Let's talk about the advantages. First one is it is reachable for the common man. Let's try to understand this point with an example. We all know that MRF stock is trading at rupees 63,000. So, can you think about buying a MRF stock, a single stock at rupees 63,000? I don't know about you, but definitely I can't buy a single stock for rupees 63,000. So, penny stocks gives us the opportunity to invest in stock market even with a small amount of capital. You need not have to have a large capital to invest in. You can buy many quantities of stock with a small amount of capital. So this penny stock gives us the opportunity to invest in stock market. Second is with genuine research, it can give you enormous profit. What do you mean by this? If you have done your homework properly, that means if you have done the fundamental analysis properly, the technical analysis properly, then definitely the probability of generating profit may increase. But if you are buying the stock, if somebody recommends you, then the probability of getting profit will be lower. Third is the availability. It is available to the general public to invest in. Despite being available at a cheap price, the risk associated with penny stock is extraordinarily high, and this is because of its high volatility. Here, the chances of generating higher profit is same as that of losing your money. Generally, the penny stocks are issued by small companies or a startup. So, what if they file bankruptcy? So, if they file bankruptcy, there are chances that you may lose your money at a single shot. Also, a very famous scam which is associated with penny stocks is the pump and dump scam. Here, some people inflate the prices, or we can say that they popularize the stock and inflate the prices of the stock. The demand for the stock will increase as they become popular, and with increasing demand, the prices will also increase. So, what will happen? After certain level, the stock will crash like maddening, and the people who have invested in such stock before the news comes in only will generate profit, and the rest will have to face losses. So this was all about the advantage and disadvantages of penny stocks. Peter Lynch, who is an American investor, a mutual fund manager, and a philanthropist, coined the term multi-bagger. This term became very much popular amongst the investor as Peter Lynch gave them the practical example how companies like McDonald's, Walt Disney gave a huge return to their shareholder. According to him, stock which gives you a return of more than 100% is called as a multi-bagger stock. For example, if a stock is giving you a return of 10 times, then it is called as a 10-bagger stock. If a stock is giving you a return of 20 times, it is called as a 20-bagger stock. Now, a question which comes in our mind is that can a penny stock be a multi-bagger? There is a logic behind this. See, usually penny stocks are issued by companies having small market capitalization. So it is easier for them to double or triple its net worth in a short while as compared to the large capitalization company. So we can say that a penny stock can be a multi-bagger, but only and only if you follow certain rules before investing. And we are going to discuss that rules further. Before discussing the rules, let's have a look at the experts who mastered this subject and was able to generate a multi-bagger returns in the stocks. I will just quickly read out the names along with their investment. Rakesh Jhunjhunwala in Titan, Radhakishan Damani in United Breweries, Vijay Kedia in Atul Auto and Sundaram Chemicals, Dolly Khanna, Rajiv Khanna in Hawkins Cooper and Avanti Feeds, Purinju Veliat in Biocon and Jubilant Life Science, Basant Maheshwari in Granules India and Ujjivan Finance, Muddar Petria in Mercator and Sumit Industries. These are the experts who were able to generate a multi-bagger returns by investing in these stocks. Let's discuss the rules one by one. Before investing in any company, you should check the past performance of the company. You should check the financials of the company, whether the company is able to generate profit or not. And the profits are generally reflected by ROE, which is return on investment. If the company is generating a profit, a good profit, then you can invest in such a penny stocks. Apart from this, the company should come up with a unique business idea or an innovative product so that they can stand out in the market. Even the demand for their product will be very much high as compared to other products in the market. The company should have less debt or it should be a debt-free company. That means they should not have loans. Last but not the least is the promoter's intention, and this is very very important before investing in any penny stock. The promoter's hard work should be reflected in his business. He should be committed towards his business and should have the ability to scale up his business. He should work with complete honesty and integrity. Even he should share the profits which he has generated in the business. The profits are distributed in the form of dividend. If the company is generating profit and distributing it in the form of dividend, it is a very good sign from which we can check the intentions of the promoters. If these rules are followed before investing in a penny stock, then the probability of generating a higher returns or a multi-bagger returns are higher in a penny stock, and this penny stocks can be converted into a multi-bagger stock if these rules are followed. I have screened out few penny stocks with good fundamentals. First one is Bansali Engineering Polymers Limited, which is a petrochemical industry, is involved in manufacturing of resins, and its current market price is 45.80. BLS International Services, which provides outsourcing of visa and passport services, is currently trading at 41.90 rupees. SPL Industries Limited, which is a garment manufacturer, is involved in export of cotton garments, is trading at 25.15. Phenotex Chemicals Limited, which is a chemical manufacturing industry, provides chemicals to textile, water treatment, fertilizer, and paint industry, is currently trading at 25.90. Indraprastha Medical Corporation is engaged in production of healthcare products and is trading at 39.70. One very good thing about these companies are that no shares are pledged, so which gives us a very good signal. Alok Industry, a trending stock nowadays. It zoomed up like anything within few trading sessions. What was the reason behind it? Let's try to understand it. Alok Industry is a textile company based in Mumbai. Its total promoter holding is 6.5 or 6.4%, which is very very low. Also, the shares are pledged. That means the promoters have taken loan against their shares. If we have a look at its financial, it doesn't look that good. Continuously, we can see a uptrend and a downtrend in their financial. Also, the company is almost bankrupt. Then, what came in between which helped the stock to zoom up? So it was Mr. Mukesh Ambani who came in between and tried to boost up this company. Reliance Industries, along with JM Financial, acquired Alok Industries, and now they are busy in manufacturing of PPE kits, which are required by our medical staff to fight against the COVID-19 patient. So this was the turnaround story for Alok Industry, which helped them to become a multi-bagger stock. The stock was trading at rupees 14 or 15 before few trading sessions, and now it's trading at about 28 rupees. So it can zoom up like Ruchi Soya stock, which also gave a multi-bagger return. By now, we know what are penny stocks, what is a multi-bagger stock. We also discussed the difference between a penny and a multi-bagger stock. We also discussed the advantages and risk associated with a penny stock. We also discussed the rules to invest in a penny stock. And I gave you a list of penny stocks which are fundamentally good. And at the end, we discussed the trending stock, which was the Alok industry. So finally, one thing which I would like to recommend you is that don't invest above 3 to 5% of your total portfolio into a penny stock, as there are chances of both that you can get a multi-bagger return in penny stock. At the same time, there are chances that you may lose your whole investment in a one shot. So don't invest more than 3 to 5% of your total investment into a penny stock. That's it from my side. See you next time. Stay home, stay safe.